everyone, and welcome back to another week of Nexus Grain Market Updates. It is Tuesday afternoon, September 16th at 4:32 in the afternoon. Let's get to our afternoon markets and have a nice little report I think that all of you would find interesting today. Across the Nexus terminal markets this afternoon, I am 387 on corn, now through November across most of my major markets. That price is up 6 cents from yesterday at this time and up 7 cents on the week. Soybeans also very strong right now. Across my terminal markets, I am 972 to 977. That price reflects about a 7-cent increase from this time yesterday and 16 cents from this time last week. So we have a combination of a couple of things. One, some of the early yield reports that are coming in are not quite as great as maybe that the trade liked to talk about a month ago. I know that we're in that what I would call the trickle season, where we're starting to see some very, very early yields coming across the scales. Really too soon to even show any numbers yet, but at least some of the early estimates have indicated that indeed the funguses that we all became unfortunately very familiar with this summer have probably taken some of their toll. The 6 to 10 and the 8 to 14 day forecast, both calling for much above normal temperatures. Real good weather for corn dry down right now, and maybe Mother Nature will take care of some of the BTUs that are needed to dry our corn down. Normal precip, which for this time of year really isn't much anyway. As far as what's going on in our cash markets, National Oilseed Processors Association did announce their August crush that came out earlier. 189.8 million bushels of soybeans crushed in the month of August. That's up 20% versus a year ago. As most of you know, there has been an enormous amount of brick and mortar poured into that industry, and crush margins are still holding in there pretty well. The August number was down a little bit from July, but there's evidently a certain amount of late season downtime, and particularly this time of year anyway, it's not that unusual to see some of these plants taper off a little bit. I fully expect to see close to 200 million bushels of soybeans being crushed by the time the 1st of October comes around in 2 weeks. So that industry is certainly poised to really put the throttle to the floor. Export inspections really pretty good. Both soybeans and corn at the top of the guesses. 59.5 million bushels of corn packaged up to leave the country. 29.6 million bushels of soybeans. The NAS reports that are coming out in a couple of weeks, I would normally say not a lot to talk about, but really one of the concerns right now, and I had a couple of people reach out to me, ask me about the industry in general, and as far as the grain elevator industry and the amount of space that's available versus on farm. I did an analysis. First of all, the grain stocks, September 1 grain stocks report, we're going to see that come out on the 30th of September. My prediction is that we're going to see somewhere, Iowa's corn carryout number should be somewhere around 400 million bushels. Minnesota's number somewhere around 250. That's my estimate. That in both cases, that is a 6-year high in both cases, but certainly a very, very manageable number. I do want to extend to everyone, I know by now most of you have already seen quite the blitz that we've put out with accumulators. I want to put some charts up on the screen and go over just a few fundamentals, a few technicals, and really let's just start off with number one. Really what I'm doing here is I'm comparing December 25 to December 26 corn. The main thing that I want everyone to see is that over the course of the past year, basically from, I'm going to go back to October of 24. Let's just go back to, again, the past year. Through most of the period, at least the first half of that, 26 and 25 were essentially just trading right there in parallel with one another. Really not a lot of difference between those two markets. They really diverged about planting season of this year, April, and by the time we got around to now, harvest time, we're looking at some fairly healthy carries between now and later. Really, there's two things going on in this thing that I want you to both, that I want everybody to observe. The first thing, the market has fallen and recovered significantly. The first, obviously, fall is just because of the acres that got talked about from planting up through the end of August, and then as August traveled into September, we're sitting here now in the second week of September. The obvious damage from the funguses are becoming very apparent, and you can see that in the response of both markets. However, the carryout that I aforementioned, that is the explanation for why these two markets have diverged. What that has created is an opportunity, and I'm going to go to slide number 2 at that point, and I want you to look at a couple of numbers. First thing, I have this in my own notes, but when you look from the low to high, what I had displayed here from about a year ago until now, the 2025 Dees corn has a 87 3/4 cent trade range. Okay, fairly wide trade range. The December of 26, less than half of that, 36 1/4, and that's where the accumulators really shine when we get into these range-bound markets. The tighter, the better. There's plenty of time to sell an option, collect time value out of that, and watch this thing just move forward in time, and not change a great deal. With that said, take it to the next slide of image number 3. I have here, I have an example of quite a few. We wrote a lot of these in the past 7 trade days. These 5, we wrote a few of these accumulators. We saw the market get up around 505, where we could get some people in at that. But you take a close tonight of 469.5. We're able to write an accumulator with greater than a 30-cent premium. Now, again, there are some fees associated with that, but we're still able to offer these new crop 26 accumulators again because of the time that's involved. Greater than a 30-cent premium. That comes with a 446 knockout. I did do some toying around. The very last image I want everybody to see is we can customize these somewhat. There's several moving parts to an accumulator. Obviously, the number that everybody focuses on is the accumulation level. And I was able to bump that up a few more pennies to 503 tonight, using tonight's closing price of 469.5, and really all that does is move the knockout. It moves the knockout up about 6 cents to 452 1/4. Again, for the person that wants to sell time, collect some value for the time that we have between now and next harvest, and really take their chances on a 452 knockout. This is really a pretty good thing to look at. I encourage all of you to reach out to your favorite Nexus grain representatives. We are professionally trained in presenting these to our customers and being very clear about the opportunities. Again, that's very easy to point out. 503 December of 26 corn, as well as the risks, the knockouts, and the double up provisions that are built into a call option style of premium contract. With that, I'm just going to close, and I want to thank all of you for your business. We certainly appreciate you as a member of Nexus. We appreciate all of you as a customer. We are your full-service cooperative, and we're happy to serve in that role. So thank you very much. I want all of you to have a very safe harvest, and we want to see you. Thank you.